Hi everybody. So today we're going to look at reviewing the first in, first out method. And I have this question here from 2006 CSEC Principles of Accounts. So let's use this to review the first in, first out method. All right, so Sally Walker is a sole trader and she has this stock item which she has bought and sold, and they're asking us to complete the stock form using the first in first out method to determine the number of units and the cost per unit of the stock remaining on March the 8th. And then part B says calculate the value of the remaining stock using the first in first out method. So we can do all of that on this one table. So let's proceed. Right. So first in, first out says that whatever goods makes the assumption that whatever goods were bought first were sold first. However, when you're on this table, basically you just want to record them that whatever you purchase, you're going to add, and whatever you sold, you're going to subtract. But you just do it as if whatever it is that you bought first, you sold first, etc. All right, so come to the answer sheet then. So on March the 1st, she bought 20 units at a cost of $4, and so she spent $80 in all, and hence she would have 20 units in her stock, right? These 20 units would be $4 each, and it'd be a total value of $80. On March the 3rd, she goes to the suppliers again and buy another 30 units at $5, right? So she spends $150. So now she has a total of 20 plus 30, right? So a total of 20 plus 30, or she has 50 units. All right, and those 50 units, in case you missed it, if we could just jot it down here, will be 20 at 4 and 30 at 5. All right, so the total value of these 50 units would be 80 plus 150, which is $230. All right. Now, on March the 5th, she sells 25 of these units. So if we're using the first in, first out method, we would assume she sold from the set she had first, and then from the set she bought last. So we know for sure that the end day she will only have 25 units because 50 minus 25 is 25. So the question then is, which 25 units does she have? So let's look at it and see. So she bought 20 units first, right? She bought 20 units first, and she's going to sell those 20 units first. So let's eliminate those 20. All right, so let's see. Let's turn that some color. So she sells that 20. And then now she's going to sell 5. Right, she's going to sell 5 out of this 30. So which means she's going to be left with if you see it now, she'd be left with 25 at $5. So therefore, the value of her stock on March the 5th, after she sold those 25 items, would be $125. Okay, there you have it. All right, so she will have $125. Now, on March the 6th, she buys 60 units. And those 60 units cost her $5.50 each. So she spent a total of $330. So now she has 25 units here. Because remember, she sold some of these here. Right, 5 of those. So she only has 25. So 25 plus 60 is 85. All right. So she has 85 units. And those 85 units, again, if we don't notice it carefully, it will be 25 at 5 and 60 at $5.50. All right. So that means that the total value of the units she has left of those 85 units is 125 plus 330, which is 455. All right. Let me just cross out this thing she saw there, so we got a clearer picture. All right, good. So now, on the 7th, she sells 40 units. So she sells 40 units. She will have a total of 45 left. First in, first out would say then that she sold this 25. Right? So she's going to sell this 25 plus 20. Right? She's going to sell 20 out of this 60, leaving her with whatever remains. So 20 from 60 will be 40. Right? So notice again, let's get that correct. She's going to sell this 25. I say 20, but she's going to sell 15 out of this 60, leaving her with 45. So 45 times 5.5 would be the figure that goes here. All right, so what is 45 times that? I believe it's about 220, but let's see. Let's make sure that's correct. 45 times 5.5. Actually, it's 247.5. 247.5. All right. And then finally, on March the 8th, she sells 30. So 30 from 45 will leave her with 15. So clearly, she's going to sell 30 out of this 45, leaving her with 15 at 5.5. And therefore, the answer is whatever that works out to be. So let's see what that works out to be. So 15 times 5.5 is $82.50. Good. So that covers that part of the question. All right, so the answer to part A is she's going to have 15 units left, and the cost would be $5.50, and the answer to part C would be $82.50. Now, part C says, well, assume that the units that she sold on the 7th were bought on the 6th. Now, that would mean that the items that she bought last are being sold first, right? So that would be called last in, first out. Right? Last in, first out. Meaning, wherever she bought last, she is going to sell first. And if that is the case, right, they ask you, okay, well, calculate the gross profit on that. So, it doesn't matter. She bought 60 at 5.5, and there came to a total of, sorry, what I'm telling you. She is going to sell 40. It says on the 7th, right? So I had the wrong number. She's going to sell 40, right? Which cost her 5.5, right? So that's 220. And she's going to sell them for $8, right? So 40 at $8, which is obviously 320. So this is the purchase. This is the sale. And therefore, the gross profit is simply the sale minus the profit would be 100. So she would have made $100 profit. And I answered what method it was, so I gave you that answer first. She is assuming that whatever she bought last, she sold first. So last in, first out. And then the last question asks you, okay, so name another method you can use, and the other method is the average cost method, right? Straight up. Or what we call FIFO, or sometimes referred to as the weighted average method. All right, so there you have it, the answer to question 6, and we practice the first in, first out method of calculation. So see you again next time around.